Good evening, all. Ira Epstein with your Stock Spider ETF wrap-up, and this is for Tuesday, and we're at the 14th of March, 2023. Well, it's a pause, and we need it. I don't know if you looked at Chicago Mercantile Exchange volume. It's off the wall on their futures, set all-time records. I'm sure the CBOE must be doing the same thing, and some of the other exchanges wouldn't surprise me because it has been a rush to the door. At least today, no more bad news about a bank. But we did get the CPI news, and it's still running hot. It is not down enough. So unless there's another bank problem that comes up in the next 8 days, remember, a week from tomorrow is the FOMC meeting. Unless there's another problem that shows up between now and then, I think that you're going to see that the Fed goes with 25 basis points. I was looking at the CME Fed Watch page, and the odds are overwhelming there. But I think they're going to say it just the way I did if you were to ask it, as long as we don't get something else. And that brings me to where we're at. How did all this happen? Don't they do bank stress tests? I know they do. Was nobody looking at these securities and understanding that they had to be falling in face value, not just theirs, but everybody in the banking system? Where are the hedges? Where's the amount of cash that if, especially in a niche bank, that if the niche that you're in goes sour, there's going to be the call for money by the people that have deposits. It's known, and that's it. What is beautiful about the big banks, the ones that are too big to fail, is they deal in everything. So a niche here, a niche there, they don't just have that. They got everything, and it's a little different. But these smaller niche banks, I think if I'm the Fed, emergency stress tests immediately. Deploy the auditors. Have it done. Have the banks give them the parameters, what you want, get it done, and get the problem under control. That's the very first thing. I was cracking up when I heard that Barney Frank got caught in the signature deal. I mean, come on, Barney. You're the guy that set up this whole Dodd-Frank, and you get caught? Where's your bank controls? So you go through all this, and then I see that the Fed, they're in a rock and a hard place. They can't not go for the 25 points if there's no other bank issue, because the inflation numbers are strong. They're not weak. They're still strong. I know they keep telling me rents and shelters falling. It's 60% of CPI, and it ain't falling. Read the report. I'm sending a report out tonight to all of my subscribers so that they will see that. Speaking of subscribers, I'd love when you subscribe here, but could you do me a favor? I work for you pretty hard putting these out. And to put them out isn't inexpensive or easy. I do it every night. A thumbs up would really be appreciated on a regular basis. It helps us with the algorithms. The algorithms attract new people. New people get us subscribers. It goes on and on. You get it. So I'd appreciate that. All right. So in Schwab, let's get away from today because we had talked about this. I said to you the chart pattern coming in was breakaway, runaway gap. Now what happens? Okay. If you're not going to do that, you go fill the first gap. It's exactly what happened here. Now the question is, beyond that, does it make a run for this? Well, it doesn't have to. If you take a look at what's going on, you got lower highs, lower lows. The moving averages are coming in, and they're going to fall to the point where getting to that gap is going to be very difficult. Why? Because the 18-day average of closes in red is going to get underneath the gray very quickly. And as it does, you got another bearish crossover. Now, it's not the ultimate lineup where the 18 is under the 100 and the 100 is under the 200. You still have the 100 lollydolling back there, and it doesn't fall real fast. So this will be where the 18-day average will fall. Eventually, if prices rally, they'll come together, and that'll be a resistance point. It doesn't have to be here. Whenever you have this big two-day event, you get quiet. Be careful. Did I not say last night to all of you, I said, big Mondays often get Tuesday reversals. I quoted Yale Hirsch from Stock Traders Almanac, went through all that. Classic case of what happened. So that's where experience comes into this. You learn these things, and instead of ready to jump out the window, which I told you my experience I would have lived, unfortunately, you don't. You get your handle. But all you did is fill a gap. This game has not said that Schwab is okay. It's trying to get back into the 18-day average of closes. That makes sense. I realize they've shown how much money they have on their books and all. That isn't, it's not an attack on your company per se, but it is an attack on your profit centers. Why? Because if you were giving X percent to keep people now, you got to pay X percent more because everybody's going to want a higher return. Everybody in America is now educated that has reasonable amounts of money. I should get more money on my money at the bank or my brokerage account or whatever the heck they have over there. You're giving the free commissions away. I understand it, but you know what I'm getting at. So you look at what the market's doing. You're back to the Bollinger Band. You closed today at 56.68. The Bollinger Band's 56.36. You got right back into it. Okay, now you can afford the fall. You had 3 days under it in a row. I count each successive day I take away from the 5% of the time of the theory of the algorithm that the market will stay under or above prices. Got it? And by taking that away, I had coming in a 98% chance that number one, we were going to rally back to the Bollinger Band, and number two, it would try to close over it. It worked. Now I don't care if it falls. You start the process over again. When you look at slow stochastics, they don't want to embed. That's great news. Now, did they embed? Let's look. So we come back, and yesterday both numbers were under 20. The day before, both numbers were under 20, and the day before, they were under 20. Stay with me. Even the day before. Now, today, you get the number at 23. What is that signal? It's a signal to cover all shorts if you're not out of them and run. Why? Because unless you go through this low right away, the odds favor price and the closest main moving average are going to make a run at each other. So am I as bearish as I was? Absolutely not. Now we'll see how this unfolds over time. Remember what I said. You shouldn't take out the most recent low. Otherwise, you got to start the whole process again. Under UGA, lower highs, lower lows. Wouldn't be surprised if you make a run. But as I said, I don't think you're going anywhere if you get down here. We still have the benefit of spring, summer driving about to happen. So I think that'll be okay. NVIDIA, just sideways action. What's probably going to hurt NVIDIA is Cramer's bullish on it. I keep hearing him talking how bullish. You know how he's been on that. And we'll see. I just see a sideways action, not doing anything, spinning itself right in there. Tesla, makes sense that you're getting a bounce. What did you do down here? So, did we embed? I always go back and I look to see where we're at. Both numbers were under 20. Both were under 20. And both were under 20. And what did you do today? Same thing. So, as far as I'm concerned, the other part of people that might have hung in there, today was the day, run for the hills out of shorts. Again, you take out 163.91, you go back to the drawing board. But am I even thinking of a short sale? I am not. That's important. This all fits into the game plan. Did we embed here? I'm not going to do this on every chart. I want you to go to our website under the word education. You can do this right in our course there. Take a look. Both numbers day before, there, and here. You're embedded. I want to come back one more. This is Monday. This is Friday. And let's go to the day before. Not embedded. Today's the day you embedded. So now with the day that you embedded, you pay attention and you have to say, what is tomorrow going to hold? The first thing that's going to happen is until you lose it, the pros are going to sell the market short. On a rally, if it rallies tomorrow, I say they'll sell it, and they'll bail if you get the reading on the red over 21. Otherwise, they'll be looking to cover at the Bollinger Band again. So, again, to learn this, it's pretty darn simple. You just take your cursor, go to the top here, and what are we going to do? You're going to go over. It'll take you right into the education area. Take a look at the course. I think you'll find it helpful for you. In stocks, this is about as neutral as you can get. When you drift like this, what I teach is run. Don't get involved. All you do is get whipped as it tries to move out to the upside, to the downside, and it doesn't follow through. When it follows through, we'll get involved again. But these are the constraints of the market. In XHB, it's pretty similar, all right? It's mostly downside. The home builders have the problem here, but there's a benefit to the home builders, and I mentioned it. If interest rates drop like they have and don't come back, mortgage rates this week will probably be announced that they dropped. The negative is the Fed's going to go up again, but they're going up in the short end. The back end where mortgages are set, it's not all front end. They look 10 years and out. So it could be a benefit for the home builders. I'd love to see that happen. On the energy, the market's really getting weighted. You're looking at energy prices. They're under a lot of pressure. China did not come to the rescue of the market. Saudi Arabia and OPEC seem to think that they're going to pick up their demand. I read that in the article, but the market's not responding to it. But do I like being short at a Bollinger Band? Never. Are we embedded? No. I think the pros came out of their positions and they've called it a day on the short side. And by the way, I want this to fall so that President Biden can replace our strategic reserves. He owes us that. Get it done, Joe. You don't need to get it to a certain level. You've broken hard pieces. You don't need the last dollar of this. In GLD, be very careful. You're over the Bollinger Band. You're overbought. You need the panic to continue. What if it doesn't? You're going to pull back on yourself. Be very careful here. I'd never tell a client to buy over a Bollinger Band. And silver's up to the resistance, the 100-day average. It can poke through it, but is it trending? No. You got a lower low and a higher high. I don't see anything there. Copper's been terrible ever since I mentioned to you, and I was a guy talking $5 copper a pound this year. And once China didn't do anything, I said, game over. In fact, when didn't they do anything? It wasn't the party Congress. Do you remember when COVID ended and the market was over there and when they pulled off everything and you had that little rally and then it started to fade? And then we went into the party Congress talk. They're not supporting the market. Could they? They could do whatever they want, but they haven't. And that's weighing on this market at this point in time. TLT, what was yesterday? Panic day. You got up for the first challenge of the 200-day average. You got back here. Every time you're hitting it, you're failing. Why aren't you paying attention? You don't go bearish. No, you don't get bearish, but you liquidate longs. UUP. Market could fall to the lower band. It is oversold. I'm certainly not telling my clients to sell an oversold market. I watch it and I see what it's going to do. And in FXC, you're up to the Bollinger Band. Now, do I want my clients to buy a Bollinger Band? No. Do I know what Miss Lagarde, head of the European Central Bank on this Thursday, is going to do? Well, I think she's going to raise interest rates 50 basis points. But you're caught in the sideways action and you're overbought. Do I want a position? Nope. I tell my clients that, and away it goes. So they do with it as they see. And I want you to do that. I want you to learn. Move your cursor up here, hit the icon, go to the education section, and do the best investment you can make. Invest in yourself. I'm Ira Epstein. Take care.